This is our Forex blog for April 9th, 2012. And like most days, we want to buy the strongest currencies versus the weak and sell the weakest ones versus the strong. We show the histogram on the top, which shows the real-time strength or weakness of each currency. Green is strong, red is weak. Anything at and above the dotted 80 white line is considered significant. And this is made up of 5 of our best statistical tools we've come up with over the last 6 years. 3 of them measure the direction, 2 of them measure the intensity of the direction. So anytime you see, green at and above the 80 level, it's the vast majority of dollar pairs are going up, and they're doing so with decent intensity. If you see it less than the 80 level, that trend is less likely to continue. Underneath that, we have the daily, weekly, and monthly trend. So anytime you see a lot of strength like that, followed by less weakness, that strength's likely to continue. And you can see it does here. And then some weakness comes in for a while. The daily, weekly, and monthly trend is still up, even though you have a decent-sized multi-hour pullback. That strength can definitely reassert itself, like you saw in the end. Strength, less weakness on the counter trend move, strength, less weakness, strength. About an hour here of some weakness, that strength comes back. That's what typically happens. Sometimes you have a very strong currency that's been up 3 to 5 or 6 days in a row, and because of that, it goes down all day long. You can have, after a currency's gone 3 to 5 days up with a lot of intensity, you can have a counter trend day, even though all the longer time frame trends are still up. So always focus mainly on the real-time histogram. If it's showing more weakness, then you want to sell it. Just be aware that with the dollar has a daily, weekly, and monthly trend that's up, you're not as likely to make as much money selling it as if all the time frames line up. That's just the way it goes. Later today, we see some weakness here in the euro. All the time frames line up to the downside. And at 9 o'clock, you can see some strength came in at the end. The euro-yen at 9 o'clock, very likely to go down. You can see, here's 9 o'clock. It goes down 20 pips. Today was a pretty dead day following the Easter weekend. But when all the time frames line up, you basically have much better trades. Here, the CAD was weak all day. The New Zealand was strong all day. This is not a pair that I normally trade, and I don't keep it running live. But the New Zealand CAD very likely to go up because of that, and you can see it does. It pretty much went up from 81.60 all the way to 10, went up 50 pips, pretty much just straight up. And you can see our intelligent trailing stop, hedging in here at 66, out at 86. There's 20 pips, and again right here at 89, and out at 02 for another 12 pips. And that's typically what happens when you have one currency that's pretty much strong on all time frames, another one that's weak. That's what happens. The Swiss, very weak weekly and monthly trend. Today it started off with some pretty decent real-time trend strength. And when you start to spot some, lesser momentum come in, usually if the longer time frame trends are down, you can anticipate, some weakness coming in. Here it did for 15 minutes, about 10 minutes here, 40 minutes of some deep intensity, another hour or so. So if you're watching the Swiss against the strongest one, the New Zealand, you're looking to buy the New Zealand Swiss, strong New Zealand, weak Swiss. There's a couple of methods that we use for entries. One of them is a breakout of a hour and a half sideways range right here. And this, you always want to draw your fibs on there to get an idea of where the market's going to go. Rarely does it go above the 1.618, and when it does, it typically will come back down, as you saw here. But if you're in this trade right here, the breakout, you're in at 29, and our trailing stop got hit right here at 36. You didn't make much on that one, 7 pips. Second trade, trailing stop had you in here at around 30. We'll round up and out at 52 for a 20 pip win. Or what I typically do is exit half my trade at the fib targets. If it stalls at the first fib target, I'm out. If it goes to the second one and stalls, I almost always get out of my first half here. So I would have got out of this trade half at 63, and then as it starts coming back down, the other half at the trailing stop down here. So the average exit would have been somewhere in the middle up here at 57, in this right around 30, and that would have netted 27 pips. The key to trading is small losses, bigger wins, and you also got to know when it's a low odds trade. If there's not many news announcements out, or if it's a day before or a day after a holiday, you're usually going to have less volatility, and your odds of making money, go down. The market's chopping around and going sideways and moving up 7 pips and down 12 and up 7. you're going to have a hard time trading. So, common sense always applies. But I like to do Forex blog videos every day showing our software in action. There are some pips to be made when you spot opportunities and currencies that are weak on all time frames like the Swiss and the CAD, and strong on all time frames like the New Zealand. Now the yen also was strong, so you certainly could be looking for some CAD yen sells. Let's bring that one up. Watching this one all day. It's underneath the hourly right here. Here's a decent sell right around 81.70. The trailing stop got you out at 45. Wait for a pullback. You're short here. Maybe you lost 10 pips. You're short again right here at 39. Out at 35. You probably lost 2 pips on that one. And later in the day, the yen was no longer strong, and the CAD started to get some strength into it. Not much, but a little bit. And you can see the yen had quite a bit of weakness later in the day. Now the Australian had some strength today. Keep in mind that the daily, weekly, monthly trend were pretty weak, but you certainly can trade that against another one that's showing weakness that has all the time frames weak, like the CAD. If you want to look for buys in the Australian CAD, I would rather buy the Australian if it's showing strength, if the longer time frame trends are down, against another currency that's showing weakness where the other time frames are down. You have higher odds buying this against this than you do against the dollar, even though it's likely the Australian dollar went up because the real-time momentum was going in that direction. Your odds are always better if you are going to buy one versus a weak one, if the longer-term trends counteract each other, if they're both weak or somewhat weak. In real time, one's real-time strength and the other one's weakness. Buying the Australian CAD makes sense. So let's bring that one up. And you can see this one pretty much went up all day as well. Pretty much a low volatility day, but you can see real-time strength right here. The daily trend shifted up at 4. The weekly trend was still slightly down. When it's light pink like that, it's very insignificant. It doesn't really matter. And it's coming up to the previous day's high. You might have bought this breakout right here. And a lot of times our real-time, I use range charts, which have much tighter stops than this. Typically, I will put my stop underneath a sideways area like this. If you buy a breakout and goes up and goes sideways, just simply yank your stop up. And most of the time, the 1.382 fib target is going to be where you're going to get out. So that's right here, out of this trade here at 89. If you had bought the breakout right here at 74, you made about 15 pips minus your spread. But again, this one just went straight up, and all the time frame, the real-time momentum was showing you to do that on the currency meter.